Hi everyone, I'm Miriam. I'm the managing director at Catena Capital. I'll tell you a little bit about that in a second. What I think with Ethereum Camp is great is that I think Ethereum was the wake-up call to a lot of people in the industry who got into it early with like Bitcoin 5 years ago or so, to realize that this is about more than just a digital currency. So congrats for all being here and building cool stuff on it. Obviously it's not by far not the only decentralized ledger technology anymore. And there are many that are running to Europe or to China to search for apps to build on top of it. Although by far still the biggest one, and it signalized to all of us where this industry can go and how it can scale. And so it was also sort of the beginning with Catena that we realized, okay, it's not mobile or cloud that's killing our businesses, it's the blockchain. And if this is the case, we need to do something more than just invest. What are we good at? Company building. So put the two together. And yeah, why why VC is dead? I mean, this is a strong thesis, and VC in the essence of how it grew out is definitely not dead. I mean, venture capital means giving capital to risky businesses. But what is the case, if you've ever started a company, it takes you months and somebody full-time to prepare pitch decks, to go to events, to speak to the investors, to convince them to give you funding for your projects. And with crypto, especially over the last year, it was the complete opposite. Like within the course of a dinner, you can raise $1 million or $2 million or $3 million or more. It's just crazy in terms of effort and liquidity. And so that many people, including myself, hold the view that VC, as it is, from a regulatory perspective and fund setup perspective, needs to change, or new formats need to come up to keep up with the speed of the industry and how funding evolves. Not to say that equity funding has to go away, but in how it goes, there's some changing. So yeah, quickly, very briefly about ourselves. So we do different things. We support founders who have an idea from the earliest days on, basically from concept stage as soon as you can verbalize what you plan to do. You can come to us, we fund it, we decide if we can turn it together into a successful ICO or company. We do the same for existing businesses. And then the third part is the investments via syndicate and fund. So we mostly invest in crypto companies only. And across all of that, we have a co-working space in Berlin where we bring community together. It's a lot of times it's deep dive events on decentralized exchanges, on masternodes, as well as more social gatherings where it's just about the networking and connecting and seeing if you can find other people to work with and do deals, so to say, on that evening. Yeah, we have some coming up, usual pages, obviously. Some of our projects that you might know is, for instance, Blockstack, that we supported on a technical development level. They raised 52 million in an ICO. Herdius, which is building, it's a German ICO, registered as a crypto coin, that is currently doing its pre-sale. It builds its own blockchain. So they noticed something that every chain has in common is the private key. And that means that it can, how Herdius works, can work as a cross-chain identity bridge. So it's although a decentralized exchange is the most easy to do use case on it. It's usable for a much larger scale and most comparable to Polkadot. Then we have some other companies that we go into for equity or tokens. And from a setup perspective, we're all funded and backed by serial entrepreneurs who are active as business angels as well. So that's kind of the background and also how we approach investments on a local and global level. So I want to share with you some things that we noticed that are different from going to traditional investors, aside from the speed. And feel free to raise your hands if you have any questions. before I start, I'm curious, who of you has invested in an ICO? Okay. And and who's familiar with how an ICO is structured or how the investments happen? Okay, so this might be fairly top level, so feel free to dig deeper now or later. So first one, when VC equals crypto, team, idea, and value add. So in a way, as a first criterion, crypto investors, we're not that different from the stuff traditional investors look at. From a team perspective, do we want to go on holiday with this team? Is it fun to work with them? Can we work together? Because it's a very cooperative way of working between the investors and the companies. The investors almost see themselves as fans, and wherever they go, they want to be able to promote the companies they invested in. Idea, it's the same. Right now on a blockchain level, it's decentralized exchanges that are hot, it's privacy coins that are still mostly hot. It's all kinds of protocol infrastructure layer type things, so new ways of developing blockchains. So it matters what you're working on, that it has momentum within the global investor industry. And the idea of hype, because the coin that you do when you do an ICO is so liquid and so public what happens with it, that hype is even more important in the crypto world. And lastly, value add. So if venture capitalists try to add value to the companies they give funding to, it's even more important to crypto investors because money alone is not enough. Actually, even if you have 5 million and you want to throw that at a company you think is great, you might not even be able to get in because that company needs you to do more than just bring in money, such as partners and network and so on. So if you as a company have a responsibility to keep your value high, you also have a higher responsibility to look in the investors you choose, that they can bring that on, because after the funding your coin still trades and that contributes to it. Jurisdiction matters more than the MVP. So in the usual business, you have a MVP, you have a prototype, you go out and show it, you have some initial traffic. This is not entirely true, but a lot of crypto investors won't touch your project if you can't prove or show that you know how to go about the legal setup, because especially when it has to do with tokens or coins, the regulatory environment is so fragile and changes so quickly that even if you're a developer, no matter what, the additional skill you need when you're in this industry is the legal expertise. And that's super important. So some VC letters, I think it was, actually said that on stage, and we can agree with that. It needs to be figured out. Can it be done from a legal perspective in a good country before we invest, no matter if there's a prototype or not. Public from day one for the community and investors. A third factor that investors look at, or that we look at, is what happens. So as soon as you announce that you're doing an ICO or something with blockchain, people will hear about it, they will comment about it, they will engage with you on any potential medium that you have. And us as investors, we look very closely at that. One, how many people engage, and two, how engaged are they? Do they just ask when Moon, when Exchange, when Lambo? Yeah. Basically some questions that somebody's trying to be hyped, tested whether it can be hyped and then left again, or if it's a solid project where people engage and ask technical questions and more fundamental things about the token economics and so on. So we look at that. For instance, GEMS has been the case. I don't know if you've seen that ICO. They were very hyped and very big, and they didn't even do a public ICO, just a private sale. And what happened there is they changed their terms in terms of who is admitted, what are the allocation sizes, so the ticket sizes, what is the the lockup, who can get in, what is the bonus and discounts depending on how early you go in. They changed that a few times within a few weeks, and everybody read about it, and then people said, okay, I know I wanted to invest, but now I'm going out. And this all happens under the public eyes of everyone. So, and then community as well, because the coin for an investor to pay off the investment, you need to make sure that you can prove to the investor that the coin will increase in value after the sale is done, after the investments have been made, or the first tranche of investments. So it can continue to grow. And watching your community, what happens, how they engage, is a good indicator on how hyped or at least positively treated it will be in the future. So on an ongoing, this is not only a date and time reference point that we look at for investments, but on an ongoing basis. Intra-portfolio network effects matter. Something else we look at is also for the sake of where is this project at, and can it go somewhere, is who are the existing investors and what value add or network can they bring, global partners, and so on. So while in a traditional company it didn't matter who you partnered with as long as you sold something and the revenue went up, if it's token based, and tokens and network economies are essentially that, networks of partners who reinforce each other, and then the whole economies scale and gain in value. So what we look at before we invest is also what partners, whether it's on an advisory level or a corporate relationship level, can the existing investors and us ourselves also bring in to get this project, or on a development capacity side or community attention side, to get this to the next milestone that it needs to reach. Yeah, and lastly, tokenomics. This is probably one of the most important factors that we always ask. Why do you need to use the blockchain? What's the key data asset you need to store in a transparent and open and publicly accessible way that the blockchain makes sense? And a lot of times I see that, especially if it's a company that already has an existing business with revenues, that they try to fit the coin somewhere into the project, and then it's like, oh, we use this coin to pay this service and that service, and the third service we pay with our different coin. But it's more than that. It's the token and the economy can exist in a bigger picture outside of the existing business. So if you, for instance, do something with research and scientific documents, let's just say, and you let people pay for access to this, then when you do an ICO, for example, or so, you can split that from the existing business and let the token live in its own separate economy. You don't have to force it into the revenue streams that are happening. And that matters to us a lot too, how independent that economy can run, or whether it's just a self-serving purpose. Of course, this new economy where the token and the data on the blockchain will live can feed value back to the original revenue for-profit company. But in the ideal world, we've noticed that there's a higher chance for success if it's a separate economy that lives outside of the revenue world. Yeah, with that said, if you have questions or so, feel free to get in touch. I hope to be coming to the presentations tomorrow to see what's going on. Yeah, thanks.